Going on, everyone, welcome back to another video. This one is going to be about the ultimate edition of the daily buys. I will combine all the components and all of my knowledge which I have learned from my mentors, ICT, the MMXM trader, T trades, M trades, and many more. So let's get started. First, let's define the daily bias. The daily bias refers to the direction of the next daily candle, whether it will be an open low high close or open high low close. Because as intraday traders, we want to align with ourselves with the expansion of the daily candle, and on the lower time frame we will trade in the direction of that next daily candle. The key component we will be using to determine our daily bias are the phases of price delivery, the order flow, reasons for price movement or the price context, which is internal to external and external to internal range liquidity, the MMXM's next day model and the T-Trades candle closures, and the draw liquidity, which will be discussed later, days of the week, weekly profiles, intraday and intra candle reversals, and 4-hour profiles. So first, let's define each of the component, and then most of the time will be spent on the chart, and I will show you how to determine your daily buys there. The first component is the phase of price delivery. After entering the chart, you have to assess the phase of price, whether it is a consolidation, expansion, retracement, or reversal. Consolidation, we have to avoid that. Expansion, we want to engage ourselves within that. Retracement, we want to wait for retracement towards an internal range liquidity. Reversal, we need a confirmation and then aligning ourselves with expansion. So here are the schematics. The consolidation, you have to wait for either a range high or range low manipulation. In a retracement, you have to wait for the internal range liquidity. The retracement to expansion is actually the internal to external range liquidity. And the reversal is the V-shaped recovery, down close candles followed by closure above. The second component is the order flow or the market sentiment. After identifying the fair price delivery, you have to assess and you have to read whether the bullish PDRs are respected or the bearish. Is the market creating higher highs, higher lows? Is the market creating lower highs and lower lows? You can use the order blocks, the fair value gaps, the swing highs, swing lows, the inversion fair value gaps, things like that to define your order flow. I have a video which is covering us. I have a video especially about the order flow lesson. You can check that out later. The third component is the internal to external range liquidity. This is that retracement into expansion phase. You have to align yourself with order flow. For example, we have a bullish sentiment, a bullish bias. The price retraces towards an internal range liquidity and then followed by expansion toward the external. And external to internal range liquidity is a counter turn move because our initial bias and order flow is bullish and we are trading the counter swing points towards the internal range liquidity. The fourth component is the MMXM's next day model in the T-Trades candle closure. The MMXM next day model actually is a 3 candle signature. The MMXM next day model actually helps you with the reversal inside a PD array. When the price takes a PD array, a 3 candle signature forms, candle 1, candle 2 closing inside the range. So according to the next day model, the third candle will be an open low high close candle. And also the MXM next day model states that if the price closes over the previous candle's high, or previous candles low strongly, and it will likely to continue in that direction until a certain draw liquidity is met. For example, we have a candle 1, candle 2, and a candle 3. So the candle 4 will also be an expansion candle until some draw on liquidity is met. And using the T-Trades lessons, the candle 4 has to respect the 50% of the previous candle's range. The candle 4 will form a slow inside the upper quadrant of the third candle, and also we will need a change in the state of delivery inside the second candle to confirm that reversal. The fifth component is the drawn liquidity. The drawn liquidity refers to the equal highs, equal lows, the low resistance liquidity runs, failure swings, previous week highs, previous week lows, consolidation range highs, and consolidation range lows. The sixth is the weekly profiles, so giving the time element to the day of the week. When you add day of the week to the next day model inside a PD array, for example, the Tuesday is creating the low of the week inside a fair value gap, then the Wednesday and Thursday will expand in other direction. Same for the reversal profile and confirming the intraday reversal using the change in state of delivery. Once the candle 2 closure is formed, you can go to the aligned time frame. This concept is fractal. It can apply to the 4 hour and 15, the daily to 1 hour, the weekly to 4 hour. It is actually a fractal concept. So you have to wait after the reversal signature of the candle 2. You have to wait for the closure above the series of down close candles. In a bullish example, down close candles followed by closure above, and in a bearish you have to wait for a closure below the series of up close candles that tags a PD array, and that is your candle 2 reversal confirmation. And the candle 3rd will be an expansion candle after the change in the state of delivery is confirmed. The seventh component is the intraday reversal using the 4 hour profiles. I have a whole video guide about this. You can check that out later. But it actually means that in a daily range, you have 6 4 hour candles. When the one candle reverses, creating the second candle of the next day model, the next candles will expand in the other direction until some drawn liquidity is met. This is the fractal concept like the MXM's next day model. Now I will meet you in the charts and we will explain each of the components to find our daily bias. So starting with our NQ example, I will go over the price action of the past couple of weeks. Starting with the Monday candle, we have equal highs on the top, and reading the order flow and further price delivery, we are in a consolidation. What is the order flow? We have SMT divergence with ES on this low, and we are closing above the down close candle and to an SMT divergence, which is an order block. The price retraces toward that order block. Now we can see those equal highs are this is our drawn liquidity. Now the next thing we got to do is using internal to external liquidity to find that context and the price action, or we can use the MXM next day model and the swing point formation of the T trades. So skipping the Monday's price action, the Monday's candle gap to the downside, and actually it was a bullish candle but kept away and then expanded to the upside. And also we are closing above the down close candle into another down close candle, which is creating that propulsion block. So that leads us with a bullish bias. So for the next day, we can target the previous day high. Are these equal highs? Now the Tuesday candle consolidated inside the previous candle's range, but we are still respecting that order block, and using the order flow, we are still bullish. Now on the Wednesday candle, we have taken the previous day low and we are forming the swing point, and now going into the 1 hour time frame to confirm that reversal. Now on the hourly time frame, we are closing above the down close candle that took the previous day low, and we have a large rejection candle, so that leaves us with a bullish bias for the next day. For the next day, our target could be these equal highs or this high right here. So with our next day, we expanded crazily above those equal highs and also this high right here. Now this is the Wednesday candle. Now we have reached this high, but we do not have that candle's reaction, and we are closing below the previous day high. So that leaves us with a next day model formation. So according to the MXM's next day model, when the candle 3 of the swing point is expanding, closing over the previous candle's high, the next fourth candle will also expand in that direction until a certain draw on liquidity are met or a reversal signature is established. So now we can mark the 50% of the previous candle's range, and we have to respect the upper quadrant to expand to the upside. So on the Friday's candle, we expanded. So on the Tuesday's candle, Monday was the bank holiday, we are creating that indecisive candle. Now we have SMT divergence on this candle with the ES. Now at this point, I don't really have a bias because we are consolidating at all highs. At this high and this high, we could either frame a reversal, a retracement, or a continuation to this high right here. So here I would wait for more confirmation. Skipping the next day candle, it retraced towards this fair value gap and took some lows. Now we can assume that we are inside an internal range liquidity and we would expand towards this high or these highs. Now going to the 1 hour chart, do we have a reversal signature, a change in the state of delivery yet established? Nope, we don't have a change in the state of delivery. This is a series of down close candles. If we are closing above it, then we will continue towards these failure swings. And if we are failing and reacting above this fair value gap, then we will probably go to the downside. So until now, I don't really have a change in state of delivery, not even the inversion fair value gap is a confirmation. So I will wait for that. We get the change in state of delivery, but also we are having SMT divergence at that high. So it means that would probably be the high of the day. And if we go to the daily chart, we are actually taking the previous day high, and on the ES we are not taking that, which creates an SMT divergence at that high. So still my bias is bearish. I don't have a bullish confirmation. The change in state of delivery is instant, a V-shaped recovery, a closure above the down close candles. But we don't get that, we get a reversal at the previous day high. So this candle has expanded towards the downside, the Friday's candle. Now I will clean up the chart. Now here you can read the order flow again. What do we have? A bullish fair value gap is disrespected. We have MMXM's next day model formation, candle 2, taking the previous day high. So the Monday candle would be a continuation to the downside. Another thing, we are closing below the series of up close candles into an important level, which is the all highs. So that is our change in the state of delivery. So all the confluences are saying that we are now bearish. So keeping that in mind, I can assume that the Monday would be a continuation to the downside. So the Monday candle expanded to the downside, and it is respecting the 50% of the previous candle's range. Now same I could do for the Tuesday's candle, because we have a bunch of failure swings to the downside, uh, sort of equal lows. Now after maximum expansion expectation, we could assume a reversal or retracement towards the internal range liquidity. We go down to the 4-hour chart and we will look for a retracement signature. Now we have a retracement and SMT divergence at this high, a protected swing, and a closure below the series of up close candles. So the Wednesday candle created that high first, and now it is expanding to the downside, creating the change in state of delivery. And the Thursday candle continued to the downside, reaching these failure swings. So the failure swings and the low resistance liquidity runs are your drawn liquidity in the charts. So this was the bias for the current week, and now the Friday candle was a TGIF. Now here we are on the gold daily chart for the bias of the previous week. So actually the first thing we have to identify is the phase of price delivery. So what is the phase? We are in a consolidation, but we have manipulated the range high. In a consolidation, we have to manipulate either side of the range, accumulation, manipulation, and then distribution to the other side. So we have manipulated that. Also, we have MMXM's next day model formation, and what the order flow is saying. The order flow is saying that we have rejected above all highs. We can assume a downside idea. So all the confluences are aligning. Do we have internal to external range liquidity? No, because we are in a consolidation. So we will trade the range high to the range low. So the range low is these equal highs right here. From the start of the week, we have our narrative that the price will be going downside. So letting the Monday candle print. So on the Monday candle, we have once again manipulated that high after a swing formation, and here we have SMT divergence with the silver. Now we can assume a reversal to the downside. For that we need a confirmation, a change in the state of delivery on the lower time range. So I will drop down to the 4-hour. So on the 4-hour chart, after manipulating the range high, we don't get the change in the state of delivery, and we have once again manipulated that high, and now we want a closure below the series of up close candles. We took that high, so this will be our change in the state of delivery. So in the next candle opening, we have closed below the series of up close candles into important level SMT divergence. So that leaves us with a bearish bias. Now reading the order flow again, we are rejecting above all highs. We are closing below the series of up close candle, a change in the state of delivery. And as you can see, we have a trend line liquidity, a bunch of failure swings to the downside. We can mark them as our target, and also the range low. So that leaves us with a bearish bias in the start of the week. Now the Tuesday candle has expanded crazily, and one thing more, we are closing below the up close candles into SMT divergence, which is the indication of the bearish order flow. Order blocks are getting respected, closure below the order blocks. So now we can assume the continuation to the downside, so letting the next candle play out. So on the next candle, after a large daily candle, we are consolidating, but still our bias is bearish. Why is that? If you go to the 4-hour chart, we are still closing below the up close candles. We have a stop run right here. If we are closing below the up close candle into another order block, that would be a propulsion block. So here we are closing once again below the up close candles. This gives us a narrative for the bearish bias. And if we add the internal to external range liquidity, first we had a fair value gap getting respected, and then we traded towards the external range low. Once again we retraced into this fair value gap right here, and then external range liquidity. Now if we read, and finally we reach to the consolidation range. You can align the daily time frame bias, the candle closures, and this concept is fractal. You can apply it to the 4-hour charts. Like for example, on the 4-hour, if I read the order flow, and then I can trade the internal to external range liquidity. Now in this example, I will go over the crude oil daily bias, why I shorted the crude oil, and I have a trade execution video on that too. Starting with the feta price delivery, last week we retraced into this internal range liquidity pool that leaves us with a bearish expansion to the downside. And if I read the order flow, first we had a change in the state of delivery, then a continuation to the downside, then we had a continuation purge, and then expansion to the downside, closure below the up close candles. Once again, then we are retracing towards the internal range liquidity, are these order blocks, then expansion to the downside. Then after that, we are still retracing towards the internal range liquidity, this fair value gap, and now we are closing below the up close candles, which is indicating that now we will be going lower. So letting the Monday's candle print, the Monday candle was a bullish candle, gap to the downside. Now we can assume that if we are bearish, then with the Tuesday's candle, we would form a reversal inside this fair value gap, so marking the internal range liquidity or the daily fair value gap. If we are getting an expansion, then we need a shallow run above the previous day high, because a reversal into expansion candle will be having a small wick. On the Tuesday candle, we took the previous day high and then expanded to the downside, and also closing below the up close candles into another order block, which is propulsion block. Now using the MMXM's next day model, the candle 2 closure, so the candle 3rd will be an expansion candle to the downside, open high, low, close, and we have drawn liquidity right here. Now with the Wednesday's candle, we took the previous day low, but we failed to displace below and close inside the range. And also we have SMT divergence with the gasoline right here. The gasoline took this low, and while the crude oil is stronger, and it is creating SMT divergence at this swing point. So we have a candle 2 closure. This is that external to internal range liquidity, that counter turn move, because our order flow is bearish and we are trading that retracement towards internal range liquidity. So we have a candle 2 closure dropping down to the aligned time frame to confirm that reversal signature. So here on the aligned time frame, the 1-hour time frame, we have a change in the state of delivery, a daily candles wick formation, and we have bunch of failure swing equal highs, so we can target them as well. Thursday candle expanded to the upside. So according to the MMXM next day model, when the third candle at the swing point is expanding and we do not reach a certain high or low, then the next candle will also be an expansion candle respecting the 50% of the previous candle's range, so marking out the 50% of the previous candle's range. And this is our draw on liquidity. So the next candle will be also an expansion candle. The next candle failure to displace, and it is actually close inside the previous candle's range. This is how I'm finding my daily bias. The next video will be an important video because I will talk about every aspect of my model. Stay tuned for the next video, and if you have any questions about the daily bias or certain things, drop them in the comment below. I will go through them in the next video. Until then, after releasing my model, I will try to give you a short lessons about the daily bias in my Discord. It will all be for free. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next one.